When it breaks away from its equilibrium, the penguins want more silver. It goes out of that equilibrium, and then the chances are very high that it's going to go as far again. So basically, you get a signal of a big move. But I'm not excited about it because it is kind of, I'm already calculated that that's what's going to happen. So I can sit there. When it gets to 80, you'll be seeing the perspiration coming off my brow because I'll be going, oh, is that it? Is that it? Should I take my profit? Oh, and everyone else will be thinking, it's going to go to 100. Oh, yeah, it's going to go to 100. Well, we're at that 4,000 in gold, and the chances of going to 8,000 is 50-50.
I mean, gold is, I think it's going much higher. I have an ultimate price target somewhere around $15,000 an ounce. But over the very short term, like the risk reward ratio is least favorable in gold to me of all the metals I track, specifically silver, uranium, gold, and platinum.
In a powerful market breakdown, financial analysts Clem Chambers and Steve Penny warn that silver may be entering one of its most explosive phases in decades. Chambers explains that when silver breaks away from its equilibrium zone, the market behaves like penguins rushing for more silver, a metaphor highlighting how fast momentum can accelerate once price escapes its balance point. According to his analysis, such a move doesn't just trigger volatility, it signals the potential for an equally large follow-through move in the same direction. As silver approaches the $80 level, Chambers admits that even experienced traders feel the pressure. While many investors will assume silver is heading straight toward $100, he emphasizes that this is the moment discipline matters most. Short-term euphoria often blinds traders to realistic profit-taking decisions. Steve Penny adds that although gold carries massive long-term upside, potentially reaching $15,000 an ounce, the near-term risk-reward ratio is strongest in silver. Among the metals he tracks, silver offers the most compelling setup, with market behavior, technical pressure, and demand aligning for a powerful breakout. This developing trend suggests that silver's next major move may unfold faster and more violently than most investors expect. If you found this helpful, like, share, and subscribe to The Metal Bar. Turn on the bell so you don't miss any updates. And comment below to share your thoughts on it. Appreciate you for tuning in. Now, listen to the interview.
But yeah, silver still remains undervalued relative to gold. In fact, right now, this is one of the data points that suggests we could be moving into the next push higher here in the metals, because the gold-silver ratio, silver is just breaking out against gold. And the gold-silver ratio is breaking down against a key support level. Okay, so you can see this is the gold-silver ratio going back to 1975. And the gold had been generally outperforming silver within the confines of this uptrend channel. You can see here. I mean, it's kind of a loose uptrend channel, but you can see this pretty clear support. Back in 2011, the gold-silver ratio bottomed at 30-1. Then on the silver squeeze kind of peak back in 2021, got to a 62-1 gold-silver ratio. And just before today, we were sitting right at the lower edge of this support right here. Well, now with silver ripping higher today, and yeah, gold's moving higher too, but silver's outperforming. We just lost support here on this gold-silver ratio. So my point is that we look poised for an area where this looks to be an area where silver should begin to outperform gold, I think, by a wide margin. And kind of an interesting thing to do is flip the script a little bit and make it show silver versus gold. And when I bring up a daily chart here, this is the silver to gold ratio. And if you looked at this as like a stock, you would say, wow, this stock just broke out above its 200-day moving average right here. The 200 days just beginning to slow upwards. So this is the early stages of an uptrend. And then you've got this clearly defined uptrend channel. So this is silver versus gold. And you see silver just beginning to outperform gold. And I think there's a long way to go. As we just looked at that gold-silver ratio in the long term, 62-1 was the silver squeeze peak. 30-1 was the peak in 2011. And then back in 1980, it was 15-1. So we're still at 75-1. So if we get back to where we were in 1980, silver would outperform gold by a factor of 5, just to return to that 1980 ratio. And, you have Keith Neumeyer and probably knows a lot more about it than I do, but the geologic ratio of it coming out of the ground is like 7-1. So it's possible we even get down to those kind of levels. So short answer, I think silver is poised to outperform gold by a wide margin, although it's much more volatile. We are potentially setting up for a parabolic move here in silver. Now, I don't want to be the guy who says, hey, we're going to have a parabolic move because strategy is greater than predictions, and nobody can predict exactly what's going to happen. But I think the potential and the ingredients are coming together for a potential parabolic move in silver. And unlike gold, I think gold is entering the monetary system, and it's more likely to have its kind of big move up and kind of plateau as it enters the global financial system. Silver is more likely to have kind of a big parabolic top, and then that sets it up for a very sharp pullback. So in terms of time, things can happen really fast. Our minds are wired to think in linear fashion, but thinking in exponential fashion is not how our minds are wired. But when things go exponential, things can happen in a very compressed period of time. And I think we could be entering one of those periods in silver where, maybe there's a year or so left before we get to well into the triple digit silver area, which could mark a kind of a big blow off top. So I see gold entering the system as some way to reintroduce confidence amongst the people. Whether it's official or not, I don't know. But what we know is central banks are buying it hand over fist. Big money is buying gold hand over fist. People in the know, and I like to say, not just follow the money, but follow the smart money. And I'll just throw in there that for every crisis, you can bet your bottom dollar that the central planners, those in the positions of authority, they've got a plan for how they're going to handle the crisis. They've said, never let a good crisis go to waste. Well, they've got a plan ahead of time, and they see this crisis coming. They're not talking about it now, but they know the central planners, they know it's coming. And I believe gold will be a part of that coming solution.
Silver remains undervalued compared to gold, and the latest market data suggests we could be on the verge of the next major move in precious metals. According to Steve Penny, the gold-silver ratio is breaking down against a key long-term support level, while silver is beginning to outperform gold. Historically, the ratio hit 30.1 in 2011, 62.1 during the 2021 silver squeeze, and 15.1 back in 1980. Today, it sits near 75.1, far above historical lows and the estimated geologic ratio of around 7.1. When you chart silver versus gold like a stock, silver has just broken above its 200-day moving average, signaling the early stages of a potential long-term uptrend. While gold appears to be steadily integrating into the global monetary system, silver has the characteristics needed for a more dramatic, parabolic-style move, possibly pushing into triple-digit territory within the next year if momentum continues. Silver's volatility, however, means sharp pullbacks can follow major spikes. Meanwhile, central banks and large institutional investors continue accumulating gold at record levels, reinforcing gold's importance during periods of financial uncertainty. Following the smart money offers clues about how both metals may behave as global economic pressures build. With these factors aligning, silver could be setting up for a historic outperformance, while gold remains a stabilizing force within the financial system. Let's get into the interview.
As far as risk-reward ratio over the next few months, I think silver and platinum are more favorable entry points. But here's this long-term chart for gold, and what a beautiful pattern this is. I mean, this big cup and handle. My measured move target was up, between 3,000 and 3,500. Well, here we are. We've exceeded my expectations by a wide margin for 2025. The RSI, RSI isn't an end-all, be-all, but it's something to consider. That's this line up here. And right now, it's over 92. That's the second highest on record, or the highest on record. You have to go back to 1980. And, RSIs up there tend to be like a caution signal. It doesn't mean I don't think we're going higher, but there's no overhead resistance except for 43.98. That's the all-time high from back in October. Once we clear that, there is no overhead resistance. When I bring up a daily chart here for gold, I put out to our members the other day, we had this little triangle pattern here. And I said, let me pull up the spot gold price. It's a little bit of a cleaner chart. This little triangle pattern here. And I said, if we can manage to break above this red line right here, the path of least resistance becomes a retest of this 43.81 all-time high from back in October. So I do think we're headed for a retest here in the weeks ahead. Do we punch through it and, continue higher? My baseline expectation had been a little bit more of a sideways churn. So, I didn't think the most probable outcome was a rip higher here to new all-time highs in silver or gold before the end of this year. Well, silver's breaking to new all-time highs. Is gold going to follow suit? Remains to be seen, but I'd watch this 43.81 level. If we can get above 43.81, we could just continue higher in gold. My baseline assumption had been more of a sideways churn here for a couple of months. And I believe largely generalist investors in the market in general are pricing in, high $30, maybe $40 silver So I don't think the market, especially the mining shares, are looking and expecting silver prices to remain sustained up at 50. So my point is, if silver can just, even if it doesn't, if this breakout doesn't hold, which I do expect it to, I think $50 is now a solid floor of support. But even if it doesn't, if we can just maintain a sideways churn above $45 silver, there remains plenty of room for mining stocks to continue to play catch up. We've got the next quarterly earnings reports coming up. Well, they're still pricing in much lower silver prices and gold prices for that matter. So if we can just maintain where we are, that's still there's still plenty of catch up room for the mining stocks.
As we look ahead over the next few months, the risk-reward setup in silver and platinum continues to stand out, especially as gold pushes into uncharted territory. The long-term structure in gold still supports higher prices, but the market is now operating far above what most analysts expected for 2025. Momentum readings are stretched, and while that doesn't signal an immediate reversal, it does suggest increased volatility as gold approaches major breakout levels once again. What matters most here is how the broader market adjusts to these elevated metal prices. Generalist investors are still valuing mining stocks using outdated assumptions, and upcoming earnings could be the catalyst that forces a major repricing. If silver can simply consolidate above the mid-40s, even without an explosive continuation, there is tremendous room for miners to catch up and re-rate higher. This disconnect between spot prices and equity valuations is exactly where the opportunity lies. Platinum, often overlooked in these cycles, may quietly offer one of the strongest setups of all, with a favorable entry zone and a supportive macro backdrop forming beneath the surface. If you found this helpful, like, share, and subscribe to the Metal Bar. Turn on the bell so you don't miss any updates, and comment below to share your thoughts on it. Appreciate you for tuning in.